Hi everyone.
Hi everyone. Welcome back to Infinity World.
What is going on? So we are back. We are in action, and we have got a serious episode for you today, haven't we?
We have. I mean, the first, apart from the stock market and the worry about the crashing and interest rates, that's what we're going to talk about. Look at his hair. He's taken that hat off. Look at his hair. So,
Yeah, exactly. You know, the sleek look. No, I just had it got too much because I got my brother to cut the sides, which was fine. But when this gets too long, it's terrible.
Right. Yeah. So it's a number 2.
It's a number 3 all over, actually. Number
3. Okay.
Self-done. So not bad.
All right. So we're just waiting for the bottom. And the beard's been trimmed as well, right?
The beard's, but yeah, I had to keep some sort of consistency,
You're almost like a hedgehog. You hibernate and you create all this hair, and then it's sunny outside, so you come out.
It's true. I'm coming out now. I'm coming out, yeah.
Start shedding all that extra hair that you got.
So we got tech upgrades as well. We got a new microphone. Yep. You must probably hear my voice. But yeah, so no, if you haven't seen already, obviously the title of this video is "Why is the stock market crashing? The stock market opportunities and market manipulation." So it's be a very interesting conversation. But before we go into it, you've most probably seen from the title already what we're speaking about. But I really want to stress how useful it is that you watch our videos as soon as they're released, because we're talking about things that are happening now and the opportunities that me and Marttand are making the most of, right? So if you guys don't know already, some of the insight that we shared last year, got our personal stock portfolios up by over 50% on the year, which is insane. And I mean, we're no financial advisors, but we're sharing our experience, which you can learn from, right? It's as simple as that. And so,
it's not financial advice that we give.
No.
We talk about discussions and we talk about what we're investing in, whether it's stock, shares, commodities, anything, basically.
Literally, what me and Marttand are doing. So again, make sure you hit that subscribe button so you can see our videos in time, and make sure you smash the like button, because the way the algorithm works, we won't show up in your feed if you don't like the video, right? Simple as that. So make sure you do those things so you don't miss the opportunities. So that's that, right? Cool. Sounds
well
good.
Said, Kiki.
I'm looking forward to this. I'm looking forward to it, Marttand. So what a month February has been, Marttand. I mean, what a start to the year. I mean, we ended in a slump on February.
Look, nothing goes up forever, right? And all my mentees, I tell them, I said, listen, the market's in cycles. There's an up cycle, there's a sideways cycle, and there's a down cycle.
Yeah.
Right? Those are the 3 cycles. And in the year, there is usually a correction.
Mm-hmm.
Right? There is usually a correction. No one can pinpoint it, but there are certain times of the year that are more favorable than other times of the year.
Yeah, exactly.
Right? If you follow us, you'll find out when these times are favorable.
Yeah. We've been talking about it.
Well, February is a shit month, excuse my language, for the NASDAQ. The NASDAQ never performs really well in February.
Mm-hmm.
March, again, it doesn't perform that well. April is a very good month for the stock market. Generally, it is a very good month. But you saw what happened last year. We've gone up straight up. We've just gone straight up. Right? There's been no retracements, hardly any pullbacks that you can buy, meaningful pullbacks, and I don't mean 0.5%. I'm talking about meaningful corrections, 10%. Mm-hmm. And these are all healthy for the market. But we haven't had any of that because of the liquidity in the market at the moment.
Exactly. Yeah. I mean, they obviously, like, the markets have been plummeting, and rightly so. There's a lot of inflation prompted fear. There's weak economic performance reports, the pound falling, there's US fiscal stimulus package, gold falling.
The other thing I'm just going to say, I'm going to add, is it's amazing. I know the title of this video is "Stock Market Crashing," right? I don't think we've seen the start of it, by the way. Okay, we are a few percent off the highs, and I mean like 3% off the highs, 4% of the highs. NASDAQ is about 6% off its all-time highs. It's ridiculous. That's not a correction. A correction is 10, 15, 20%.
Yeah,
exactly. And that's the proper correction.
Very
so
right.
At the moment, we are not anywhere near there. But hopefully it will be showing you some charts that show you that could happen. We're not, listen, no one has a future forecast, right? What we all work on, apart from the Jedi mind trick,
which you've mastered.
Yeah, of course. Well, someone's going to say you are Yoda. I know someone's going to say that. Okay, anyway, just came back to this.
Maybe I'll edit the thumbnail for your videos, Yoda.
Oh, mate, you're going to do that, aren't you? You're going to give me the lightsaber again.
Wise one, yeah.
So look, stock markets go in cycles, right? We've had and no one knows, and I think we need to discuss that. We don't know, that for the last 12 years, the stock market has gone up. Yeah. And I don't mean, 20% correction. I mean, we saw that one of the quickest market falls last year in February, March, because of the COVID, right? And the quickest recovery that we've ever seen, right? So, this market is all over the place. Now, if you look at longer term perspective, the market has gone up for the last 12 years, right? And we do have a bear market phase. So no one knows, and everyone knows that, sooner or later, we're going to have a pretty big bear market, right? It's on the cards. It's on the cards, right? But no one knows when, whether this is it or whether that, no one knows, right? But you've got to just be mindful of the positioning that you are at now. So if you look at, what the stocks have been doing, the Nasdaq, there is something called Dow theory. Dow theory hasn't been quite working, but in the Dow theory always used to say also, follow the transportation, follow the leading stocks when they start to turn. Now, the tech stocks have always been the leading stocks, right? Tech stocks have been leading the way. The big tech went completely crazy. Small caps then followed. The Dow has followed. Now the leaders are beginning to wane. If they carry on waning, then we could be, when in 2000 in the dot-com bubble, I could talk about that. I could talk about 2008 as well. 2008 was quite severe, quick, but it's almost like a topping action. The stock market doesn't ring the bell. This is what you've just got to be mindful of. Stock market doesn't get to the top and go, ding, ding, everybody on board, we're going down. It doesn't do that. It does not do that. What it does is it forms a topping pattern. And it's understanding how it's forming that topping pattern, how the high and lows, and what you tend to find at stock market tops, or whether it's a long term, a short term, especially longer term stock market term, there is high volatility towards the top, right? And generally you find the institutions are bailing out and all the little folk are going in, going, oh, is there a correction? Oh, I'm going to buy in. And these guys are just selling it, right? And you tend to find that your emotions really take control. It's going up and down, right? But it is a process that can take a few months to actually create. Yep. So it can go down, it can come back up, it can go down. As long as it's not going above the prior high, way above the prior high, and the trend was set down, it's just retracing the initial leg down, right? It's either 100% retracement or a 50% retracement. So, I mean, this is where we are at the moment as far as the market's concerned. No one knows. But I did, I was far too early to the party. And I was calling for some sort of correction, and it didn't happen because of the liquidity. There is a huge amount of liquidity out there, and that's what's called to go up. Now, I think we should talk also about: do you think the stock market is in a bubble?
We'll talk about this, and we'll talk about some interesting things. But what you, I just want to sort of summarize what you've highlighted there. It's like right now there's a lot of fear starting to instill into a lot of investors and concern, a lot of financial anxiety, what I like to call it, in the markets at the moment. And could this be the tipping point? Could this be the tip of the iceberg where we're, sort of edging towards those top points? And so we'll have a look at the charts to sort of see if we can notice some of that behavior. But just to sort of reiterate on that, like the Guardian this week was even saying that, energy companies, mining stocks, property firms, or the worst performing sectors in London, well, obviously so because of the pandemic as well. But that they will be hard hit. They'll be hard hit if central bankers started moving away from like ultra low interest rates and tighten policy to fight inflation. So there's a lot of concern. There's a lot of worry, basically, intention starting to happen. And now coming back to your point of what we're saying, is it in a bubble? Because Martin, this is becoming, some of the markets are becoming nonsensical, right? It's based on a lot of manipulation and a lot of FOMO. And I'm going to talk about some specific things. And I think this also goes into like the crypto space and how the crypto space is performing at the moment, which is crazy as the institutions are getting involved as well, right? So just to give you an example, so we're going to go a bit sort of not completely off tangent, but just as an example of where this sort of fear and manipulation also comes from. So the CEO of JP Morgan, Jamie Dimon, I think his name is.
Jamie Dimon.
Dimon, that's it.
Yeah, I wish he was a demon. Well, he is a demon, I suppose. He is a demon.
Maybe
especially against gold and silver.
Perfectly put.
Freudian slip, mate. Yeah. Jamie Demon. I like that. It's Diamond.
He called out in 2017 and 2019, I think, Bitcoin as a fraud. And shortly after, after these sort of news bursts came out, Bitcoin plummeted and it just went down because obviously such a big person from such a big financial institution saying something like this about the Bitcoin. And ironically, shortly after that, there was many reports and official reports and suggestions saying that JP Morgan was buying a lot of crypto. And what I would do is I will share some links in this description, like I always do, of some good articles which actually talk about how JP Morgan have been buying crypto. And that's a perfect example of and I will come to GameStop in a second because I'll let you cover a lot of that. But the next one is like right now, our beloved Mr. Elon Musk is doing exactly the same thing. One day he can tweet about Bitcoin or Dogecoin. What is even Dogecoin at the moment? But he's made it something, right? And as a result, it causes forced manipulation. So is this market in a bubble? Is this the future of the market? How long will this last? Is it because people don't have anything better to do in the lockdown? Will we see normal markets behavior returning once things start opening up in post-pandemic and things actually get real? So like and GameStop as well, Martin, you was talking about that one earlier as well, right?
It really started. Do you know Hertz, the car company?
Yeah.
I don't know if you know that last year they were going into insolvency basically.
Mm-hmm.
So the Americans actually asked the courts to go into insolvency and allow themselves to refinance, but the shares are wiped out, right? Mm. So the absurdity of it is last year, once we had the huge crash down, we had shares of Hertz being bought up when this is a company that's going into insolvency, right? That's where absurdity came in. But look, we are where we are now from where we were before, right? Which is no one knows how far this can go, right? No one knows. No one absolutely knows how far it can go because it's no longer driven on fundamentals. It's no longer driven on technical so much. It's driven on momentum. Absolute rip-roaring momentum, right? And momentum can change very quickly. The best way, and I'm going to teach you something here as well, which you've never heard me say, right? But I've always kept in my head. When you're trading, think of yourself as a cheetah, right? When you think of yourself as a cheetah, think of a bloody rhino running next to you here, and all you're doing is taking big bites out of it, right? Because when that rhino starts turning, be careful, right? So when he's running alongside the rhino, just taking bites out of it. And that's what you're doing as a trader. Yeah. As a trader, what you're doing is following the momentum, taking bites out of it, watching, making sure he's not turning, carrying on. That's it, right? Put that in your head, and that's the image that will make you a great trader, because that's what you do. You don't have necessarily bring in other influences. What you look at is, where is momentum going? Momentum is the main thing about the market. So it's taken over. Taken over how the markets are functioning at the moment, which has made it irrational, or seem very, very irrational. So yeah, like I said, Hertz went up. You look at GameStop. Now we're going to talk about GameStop, right? Now GameStop, they were saying, the Reddit crowd. Oh, just going back to Jamie Dimond, as you would say, Jamie Dimond. I would never trust an investment bank, right? They always do the opposite. They always put stuff out there to trap you, right? I wouldn't trust them with a barge pole, basically, right? So I'm not surprised that, they came out like that. They've also come out recently saying, buy the dip. Last week, they came out going, buy the dip. I was like, all right, start selling. But they came out, seriously, they came out and said, buy the dip. I thought, okay, fine, here we go. So you've got to be mindful of some of these guys. The information that they give you is for their own benefit, right? Yeah, exactly. They are there. How they make money is by fleecing all the all the other guys, basically. So just going back to GameStop, GameStop, whatever your valuation is of GameStop, it was amazing. It was it was just absolutely amazing on how this stock moved. Amazing. The market came to a very, very close section of completely collapsing. Did you know that?
Yeah.
Which is why a lot of the platforms, if your traders out there, cut down, and they were shutting down because they couldn't cope with the trading volume, right? And this is also UK based trades as well, that they were beginning to slow down because they'd pushed the envelope so much that with the way markets work, and market makers work as well, is they've got a settlement period, so they've got exposure. So although these these people were buying calls, in order to when you're buying a call, an option company will have to offset that option, basically. If they've sold you a call, they need to go out and buy some stock, because otherwise they're not hedging. In order to hedge, they need to go out and buy some calls. So on the same vein, if they start selling loads and loads of puts, or start buying loads and loads of puts, these trading companies now need to hedge against that by selling loads and loads of stock. Right? So that was the rotation of it, and they just couldn't keep control of it, and they didn't know. It got to a level where they thought, well, if it collapses, we're going to be holding the ball here. If it does collapse. And that's where the liquidity problem came in. But just going back to right now, whether it's a bubble or not. Okay. I think what you have to look at is, even Michael Berry. Have you seen the film Big Short?
Yeah, I've seen Big Short. Yeah.
He called the 2008 collapse in the mortgage debt market. Right. It's a very smart guy, very, very smart guy. And he again this week has warned, and he said, you were accusing me of not warning you last time. I'm warning you this time. So it's on paper that I've warned you, right? One of the things that he's warning about is inflation, the rising of inflation, that they've pumped so much money into it that inflation's rising.
1.9 trillion US now as well.
Well, it's more than that.
I know. Just recently, I've been extra.
Well, they haven't pumped it in yet. I think it has to go to the next house. Yeah, but it got approved this weekend. Got approved from one of the houses.
Insane.
Madness. It's free money. It's free money. But anyway, going back to Michael Berry, right? He again this week warned investors and said, "Look, don't accuse me of not warning you." Now, he actually shorted Tesla, right? Now, he shorted Tesla, I think it was at 600. And even, just before it was entering the S&P, and it makes perfect sense. Tesla is well overvalued. So overvalued, it's incredible. And I'm not talking about how great the cars are or anything else like that. I'm just talking about where it stands as a stock, future hope value is just beyond belief, right? So when you look at that, when then you look at Bitcoin, I know we're both followers of Bitcoin, right? We are both followers of Bitcoin. We do believe in crypto, but it just took off again, right? Crypto took off again, but it's again, people say, well, look at Bitcoin, look at GameStop. How can a company that all the shops are shut down? Think about it logically. They've shut all the shops down, and the stock is worth more than it's ever worth in its prior lifetime. It went to 400. So it went from like 12 cents, $12 a share or $6. Michael Berry bought it ages ago, right? He actually was, but he'd bought it on a valuation basis last year or the year before that. And obviously all these shorts came in, and the Reddit crowd. And I don't think, with the greatest respect of the Reddit crowd, you are great guys. It's phenomenal what you do. But in order to move it that much, other hedge funds had actually come in and actually decided, it's almost like a war. Trading is a war. Trading is a war. It's a mental game, as well as, these guys had come in and were using the Reddit crowd as well, pushing the share prices up. So pushing the share prices up. And there's no greater, we talk about market manipulation. I'm going to pronounce his name incorrectly. Asian guy in America who runs a SPAC as well. His name is Chamath Pantamia or Pantasia, something like that. Anyway, this guy came out with a Reddit crowd in Jan, right? Said, guys, he's been on Reddit and he's been reading their posts, and he said, listen, I believe in what you do. It's great what you do. It's fantastic. Stick it to the man. Oh, by the way, I've just bought £500,000 worth of calls, calls in Reddit, basically. So he basically bought call options in GameStop. He came on and said, guys, I'm on board with you guys. He bought call options on GameStop. I think his call options were 200 and something, which is still an absurd price. Forced it all the way up and then sold it all. Made 500 million and said, I'm going to donate it to charity. Well, Chamath, if you're watching, mate, show me the certificate that you're paying charity and I'll believe you, right? Otherwise, you're just like the rest of them. Sorry, mate. You're just like the rest of them. But he forced the price up. He sold out, right? And a lot of these hedge funds did the same thing. And it was just using, the Reddit crowd as forcing it up. If you think about the volume, right? The volume, it was hedge funds actually jumped on top and just said, well, we're going to ride it. Look at the momentum, and we can blame these guys as well for doing it. And then more and more people will come on board, right? And it was a frenzy. And obviously a lot of people made money out of it. A lot of people lost a lot of money. They got completely control of it and had bought it at 400, 300. It's now recently risen again. It doubled again, or it went up 100%. But it's still 120. It's $120 a share. Whereas before it was 300, 400, right? Even now it's way over valued, right? So this is what I mean about market manipulation. And then the other one is good old Cathie Woods, right? Do you know who Cathie Woods is?
Cathie Woods, I've heard of her.
All right. ARK Investments. Look it up. ARK Investments. Look, I'm not slating any of these guys. They're far cleverer than I am. They've got far more money than I am. But don't try and cover the wool over my eyes, Do you know what I mean? Don't think that I'm stupid. I know the game you're playing. But anyway, Cathie Woods, great believer in Tesla. So she's been buying lots and lots of Tesla, supporting Tesla. So she's been buying lots of EV stocks, a lot of SpaceX type stocks, and future builder. Well, that's great. That's all well and good. But when you've got an environment where you've got rising interest rates, these again, she can be called a market manipulator. Funny enough, right? Warren Buffett, we respect a great deal. Warren Buffett, who I respect a great deal, right? Even though Chamath was saying, he's old hack. Well, people said that in 2000. I remember people actually said, Warren Buffett, old hack, you're not in tech, and it just collapsed, right? And he was like, I told you so, right? But this is, if you look at what's been going on, she came out, said, I bought Tesla. Now, when he actually buys a stock, he doesn't come out on social media and says, oh, by the way, I bought this stock. You have to wait for the filing, right? The filing is not done every week. You do the filing and he said, oh, actually, Warren Buffett in the last quarter bought such and such stocks, right? Whereas all these other guys, as soon as they buy, including Elon, our friend Elon, as soon as they buy it, they go, yeah, I bought this. Why do you think they do that when the stock rockets up 20%, right? So Cathie Woods came out when Tesla came down quite a bit and went in there and said, oh, I've bought some more Tesla. And Tesla shot up, right? Shot back up to about 7-8%, right? Because she came out and said, I've added to my Tesla position, blah, blah, blah. That's market manipulation. Normally that wouldn't actually be reported until until all the information is released at the end of the quarter or towards the reporting period. They do have reporting periods, but yet now they can do that at their will, right? And the guy, sorry, I'm talking a lot, but the guy who I really respect, right, in the UK, and I feel, So if you're listening, Navinda, please phone me. You're a great guy, right? This guy is fabulous, right? He is the one who created the flash crash. Can you remember the flash crash? And he lived in Hounslow with his parents. He's got a book as well, right? Yeah, fantastic book. Fantastic book. I tried to find it, but I think I've lent it to someone and they've just run off with it. But anyway, in the flash crash, it was brilliant. He used his mind. No social media. They accused him of manipulating, front running on contracts, basically. But he was just playing them at their own system. So it's like playing chess with someone else, and you're outthinking them, right? But you're actually in the market trying to do it. Whereas these guys on social media, you can't outthink them. If let's say you and I, oh please, let's be big on social media one day, right? If we went out and I said to you, Kiki, by the way, I'm going to just post this on my Twitter page or on my Facebook page, go out and buy some stocks. Yep, you went and bought some stocks. I posted it and the stock shot up, right? And that's market manipulation, but the SEC don't investigate that shit, right? The London Stock Exchange don't investigate that. But poor old Navinda, who did it because he was smart. And I've got a lot of respect for him. He figured out a way.
Done for.
And he got done for. He was a scapegoat. He wasn't the scapegoat. The crash was going to happen anyway. He just saw and front ran something and beat these trading houses at their own game. Right? So they would have lost lots of money, but he beat them out of his parents' house at their own game. Right, which is a real shame that then they victimized him and they extradited him to the US for the clash. Yeah, totally wrong. They should actually put Elon Musk, and he's a great guy. This is nothing against Elon Musk. He's far smarter than me. He's a super smart guy. Sometimes he's out there, but he's a super smart guy, right? But how can you be allowed to manipulate that? Do you remember he came out, I bought Bitcoin. Classic in January. So Tesla's bought $1 billion and a half worth of Bitcoin, right? Came out, bought $1.5 billion Bitcoin. Bitcoin shot up 20%. Now, do you think these guys are not aware of what their tweets do, what their postings do? Do you think they're that stupid that they're not aware of it?
They know.
Do you think that they haven't told someone that they know, going, by the way, I am going to tell you? Maybe he may not. Maybe he may not be doing this. I'm not saying he is, but maybe he's not. But I wonder if he is. Yeah. No one will know the truth, but that's manipulation.
I think we know the truth.
Yeah, that is manipulation, right?
It would be interesting. It would be interesting to
I mean, I'll get off my high horse. If Elon phones me going, Matt, listen, by the way, I'm going to do this. I'll go, cheers, Elon. I'll go long. Yeah. He then came out and said Bitcoin was undervalued, was overvalued.
Yeah,
right?
Exactly. It's
So
interesting. I'd love to hear. I'd love to hear like one of the recordings of their board meetings, the investors and stuff, to justify, by like making flamethrowers and investing 1.7 billion in Bitcoin.
wow, people bought flamethrowers. That's what I think. I don't know. Just going back to this bubble theory.
Yeah.
It feels, and it tastes like that. And it's been doing that for 8. And this is not calling a market top or not. No. It could go up another 10%. No one knows, because the Fed is controlling all that liquidity, right? But on a valuation basis, no one knows. Momentum, it can go back up. Momentum can turn very quickly the other way. Exactly, it can also turn very quickly the down way. Yeah.
Exactly.
So it just remains to be seen. But it does feel, and we're going to talk about why the markets began to crash. They haven't really. I wouldn't call it a crash. They're just correcting.
I mean,
right?
let's what we'll do
until you see the crash, and I think it's going to happen.
Yeah.
But I don't. Every time I say it doesn't happen, so
just leave it.
There's something.
We'll see.
But we'll see what turns out.
What we'll do now is to just visualize that now. Let's start having a look at the charts. Have a look. Right. Let's have a look at the chart. So what I'm going to do is just on the basis of this, I'll share my screen first of all. That would be helpful. Yeah. So we start looking at some of these charts, and what I want to first say here is let's start with some of the EVs, because obviously EVs are one of the ones that we've been looking at for quite a while now. Now, you remember a few videos about, we started talking about this thing is really expanding out now. There's been extended runs. It's led to them having very high, maybe unjustifiable like stock prices, and now isn't the time to shy away from looking at these markets and what they're doing, and potentially looking at where this is going to crash to or go to, or where this has started. And then obviously the point of this is to look for opportunities when there are going to be opportunities. We know these companies are great, as Marttand was saying earlier. It's nothing against Tesla itself, the company, but that doesn't still justify what the prices are of these markets at the moment. And so there may be an opportunity. So let's have a look at these charts and see where we're heading. So I'm going to start. I'm not going to go too depth into these, but I'm going to start off with Tesla. Right? We're looking at, this is what Marttand was talking about, when the market starts topping out. Right? We start to get some doji formations. We start to get some market slowing down, and this is on a weekly time frame, by the way. So if we go down to the daily, you can see more of that happening in this sort of consolidation period here. Now, I want to stick to the weekly because I want to look at the bigger perspective here. The very first point or area which I would sort of see is this area here. So coming down to around 400, between 400 and 450 mark, basically.
And if you just go back to the daily, just go back to the daily. Right. Yeah, that's great. But if you go back to the daily, on that daily chart, can you see the green candle, the bottom was, which is about 600? Yeah. What is it? 600?
So it bottomed out at around 618.
Right. If you then go across, you can see where your support lines were. Right. You can see all that, all the number of candlesticks. So right? So it stopped there. If it breaks that, it's coming back to your band.
Exactly. There we go.
So here's the trade. Right? There may be a move up in Tesla back to touching the blue line. A retracement, touch it, maybe, right? Or there may be a flush down. Right? To hit the 620 level, 625 level, right? Where you saw it. It may tend to take a bounce there. If it bisects that really quickly, it's going to 400.
Exactly.
That's the next support level.
100%.
Right? It's going there. So what you have to keep an eye on at the moment is seeing if that 600 from last week actually holds. Right? It actually holds. If it doesn't hold, then you've got you can short it down to 400 basically. I wouldn't be a buyer of Tesla. No way.
Not right now.
In fact, I wouldn't be a buyer at the moment of any of these companies. I would be a buyer of certain commodities, but not any of these stocks at the moment. Because one thing that we haven't covered, which we'll cover after we've done the thing, is how interest rates have been reacting.
Yeah,
and that's
yeah.
why these are reacting that way.
Exactly, 100%. So that's Tesla in a nutshell. I'm not going to go too into depth with all of these because we don't want to waste too much time here. But looking at Xpeng, for example, we're really bottoming out
Same
here.
thing.
Yeah, same thing going on here. This is on a daily. We look at the weekly. We're talking about potentially coming down to levels at which where it started off at, so around the 24 mark.
And the other thing is, if you look at Xpeng, you formed a lower high.
Yeah,
right?
Exactly. Yeah, 100%.
You've got a lower high there being created as well.
So just for the people that don't know that, so we had a high point here, then we had a low, right? And then we had another high point, which is called a lower high. So the next high was lower than the previous high. And now obviously it looks like we're heading towards a low. So this is the point that Marttand is talking about there in terms of a lower high. Yeah.
So what that is a changing in momentum, a changing in market sentiment as well.
Exactly. Yeah. So the trend is in essence is very likely reversing. So that's on Xpeng. Again, I'm not necessarily going to go into individually why these stocks have been. There's all different reasons. Tesla's also had a big problem in California in terms of one of their supply chains of one of their cars. Obviously, whether is an excuse or re-justification.
Kiki, it's all noise. It's all noise. People just look at the charts. People just look at the charts and understand how to read charts, and we can show them how to actually, understand the markets, right?
Yeah.
And also make money, longer term, short term, from the markets. But it is noise because everything moves together. Right? It's not actually necessary. You think it's news driven, but the charts are telling you where it's going.
Exactly, and this is what we're talking about. It's not necessarily. This is why we want to look at these charts to understand the technicals, which a lot of people are looking at. Not necessarily the fundamentals. Most of the time, are just a front cover up, a reason and an excuse for why these things are happening. But yeah, so NIO, exactly the same thing, similar happening. We're starting to drop off now. This is the level we break. If we break below this region, then we're looking to test around. Let's see. Regions of this basically. So we had a sharp increase here and potentially not really, that's not significant enough, so it would be coming down to levels around 14. Just
above there, or that the band can be a little bit bigger.
So around 14.
The other way
this way.
So about there, about there. That's all it looks that because you can see the reaction to candlesticks on the bottom one as well.
Exactly.
So there's a resistance level there.
So far, as a nutshell, the electric vehicles are definitely looking like they're going to keep going the way that the trend is sort of set. So let's look at some of the semiconductors, which we spoke about a few weeks ago, to give some people updates on this. So semiconductors are holding up quite well as opposed to the rest of the market, because obviously, again, don't get confused. Not every single stock will move exactly the same. There will be a general bias because obviously the way consumerism works, the way demand works, once demand starts stopping, a lot of supply chains are affected. Semiconductors, I do believe there has been an over order, massive demand, so there is going to be an issue of excess supply, and that might come. I don't know what you think on that, Marttand. There has been a lot of ordering, and all of a sudden we're going to hit this block where a lot of companies will be like, oh, we got all these
you always get it in whether it's semiconductor, it's life.
Exactly.
It's called a business cycle. And what it is, just to put it in a quick nutshell, is that companies rush to actually meet demand, then all of a sudden they've got too much supply on the market. Right? All prices are determined by supply and demand ratios, right? So in the semiconductor space, there is a shortage of chips, right? We know that, which is why they've been going up and up and up. Now, the Americans have actually said, President Biden has actually come out and said, look, we need to try and address this. So there'll be more and more companies actually producing semiconductors now, right?
Exactly.
GM came out and said, well, we haven't got enough chips, so we don't know if we're going to sell enough cars. So they've all rushed out. So now there's going to be extra production being brought online. And what you tend to find is that they overproduce. And all of a sudden, demand falls off and they've got oversupply. Classic semi-market, right? it always happens, right?
Yeah.
There's a cyclical stock, always happens.
Yeah, exactly. 100%.
So then at some stage they'll be crashing down, not because they're not great companies, but there's all oversupply all of a sudden.
100%. And just to look at that actually, so the me personally, the first sort of point I see is it's a small sort of level here where we've got quite a bit of movement happening here. So for me, is if we break below this MA, the weekly moving averages do cross to the downside, then we could be heading towards it if we see that
on a shorter term.
soon.
What time frame have you got? You got weekly.
So that's a weekly.
Can you do daily? Can you do daily?
So on a shorter term, we're looking at this region. If we can either get a bounce or we get a break of this region. So that we're looking at around but between from 5499 to around 512. So that's the sort of region that we're looking at in terms of if we get a break of this, if we get a bounce, then the semiconductors can keep going on for a little while. But like Martin is saying as well, the oversupply is a normal thing that happens. So that's NVIDIA, pretty much the same thing for AMD. This is on a daily again. We have the same sort of pattern spotting. We're likely going to come and touch this area. We're going to test it. And if it does break, then we can look at a higher time frame. This one's much more clearer than the NVIDIA one. We know we're heading to here if we do end up breaking that daily sort of support area.
I mean, the other thing I want to add is, that's a pretty big sizable correction. Right?
100%,
we're then looking at a big correction. At the moment, like I said, we don't know the size of the correction. Exactly. What's happening? It'll be interesting to see how Monday's markets open up. We're recording this on Sunday, so it'll be interesting to see how Monday opens up. I always see the open. Because the Biden 1.9 trillion bill has been passed by one of the houses. It's now going to the second house, and the Republicans are going to ask for concessions and all sorts of things. Exactly. So maybe that comes out in towards middle of March, right?
Yeah.
But so it'll be interesting to see how it reacts to that. Whether it then starts coming back down again. Yep.
Yeah. And it will be interesting to see how we hold up until April as well, because April things do start getting a bit more positive in the markets as well. So
and I think that positivity will probably come out once that bill has passed, basically.
Yeah, exactly, 100%. So so that's AMD. I'm not going to go into AMA.
Just going back. Okay, if you're already in these stocks, we don't give you buy or sell recommendations, right?
This is just
our whole purpose. Our whole purpose is what we're looking at, but also it is to actually help you build wealth, right? So let's say if you'd followed us and we talked about semiconductors and you'd bought semiconductors before and you've made a nice healthy profit, right? Something that we teach you about is when to take profits as well, right? So right now, if you are still long, some of the stocks that we've said, it's a case of, well, what you should have been doing is maybe lightening up some of it, not all of it necessarily, until these points break, but you would have lightened up some of it. Because you're taking profits, right? It's like anything, remember the rhino? You don't know if it's going to turn or not right now.
I know it's going to turn,
What the rhino is doing now is doing that.
Yep.
I'm looking to turn, but I haven't quite turned, right?
Yeah, exactly.
But what you want to do is back away a little bit, take some of your profits. Right.
Literally, you can use that analogy right now.
And then have a look to see, if it breaks this level here, then I am just going to take all of it, or I'm then going to dump another half out of it. Right. So just in case it bounces back, you've made a huge profit, right? You're looking at a huge profit. The thing about trading is, bulls make money, bears make money, pigs get slaughtered.
Yeah, exactly.
Just remember that phrase, right? It's a classic trading phrase. The reason why they get slaughtered is because they want to wring every last cent out of it. And it doesn't happen, right? No one can call the very top. No one can call the very bottom, exactly. Right? Yeah. It's a case of being mindful and taking profits along the way.
And looking at the charts to see what they're doing.
And we'll teach you how to do that.
Yeah.
Right? We'll make you successful traders.
What we'll do is, before we go into just looking at the Dixie and the FTSE, we'll just have a look at some of the bigger stocks on the market. Yep. So Apple first of all starting off now. So it's on a weekly time frame. We're starting to see some sort of crossover of the MA. We had something like that here. So what we want to wait for really is a bounce back to see if this does go up. But at the same time, we've got some key levels here to be conscious of, right? So if we do start getting any tests, and
I think the band needs to be a bit bigger, Kiki.
Yeah,
further up, I think. Yeah. Oh, okay. Yeah. You got it. Yeah, that's fine. Yeah.
So we start. Whoops.
You see that gap in the chart? You see the gap in the chart?
Yeah.
I think the first level is up the top, and then it's more likely to fill that gap in the chart.
Yeah. Exactly. So we want to.
That's a long way down. That's a long way down.
It is. Oh, I just need to. It's called like, right. So what we want to be looking at is that sort of level, and then on the daily, right? And if we do go any further, is again, just you'll start picking up on how to identify these key levels of support and resistance, which is by watching these videos. So that in itself, you're learning, and you're learning to do this because we're looking at these shots or week in, week out. This is a very, very long way down. We're looking at 70 to around 80. We're trading around 121.
Yeah, that's bear market, mate. That's exactly. Ultimate bear market. That is
the point of this, is to get you prepared and get those charts ready for when it does happen. You know where these things are heading, and this is what I'm talking about. And this is where I'm personally, I'm looking for opportunities. Right, these are the points at which I will be looking to be ready. If they do go at these levels, I'll be ready with my cash pot to purchase. And again, obviously, there is risk to that, because what if the market continues tumbling? Cool, that's fine. But you need to have your own risk strategy applied into that as well, right? So
you need a plan. You need a trading
100%. 100%.
And we can help you that. I've had a few mentees that I've spoken to and help them with trading plans like that, basically. And so you try and take emotion out of it. You just follow your plan.
Exactly. I mean, not only from the videos, but I mean, we'll talk about just at the end, Marttand, what we're planning in terms of some of the courses that we're doing, which we've got quite a lot of demand for, which we've been obviously thinking about because of the pandemic. We've sort of held back. But anyways, so again, Amazon, which is the next one. This will be more on the daily. You have to see this much more cleaner. So you can see we've got a key support. We're getting very, very close to hitting that. And again, I'm just briskly going through these now, just for you to get an idea. There's no need for us to complete. Actually, forget that. There's one key one here. We've got a few areas of movement, consistent movement here, and then here. So again, these are bear market levels, right? So we'll be coming down to the levels of 2,300 to 2,400, and then
I'm not sure if we'll get to there. I'm not sure if we get to there. This is a market event.
Yeah.
In order to get to those levels, it's a market event.
Definitely.
A liquidity risk event somewhere or something like that.
Yeah, exactly.
Right?
Exactly.
Like we had, like we had in February, March last year, which was driven by, well, no, it was driven by the bear market was driven by the pandemic, right?
Yeah.
They suddenly woke up and went, oh shit, pandemic. Now the market suddenly wake up.
Before that, sorry, I got. Yeah.
So, then the market's dropped. But this time they may actually be some sort of liquidity risk, and that's why the market's correct very sharply. Right?
Yeah. And again, it's what the main important thing here is being conscious of these levels and to have.
And I'll be happy if that happens.
Exactly. I don't want to hear. I mean, again, we're not financial advisors, but if these opportunities happen, guys, and you're not on them, and we've been talking about these for weeks and weeks to come, then you've only got yourself to say.
If it hits these sort of levels, your stomach will be churning.
Yeah, exactly. And
if you haven't listened to us and taken some chips off the table, your stomach will be churning.
Exactly. Again, not financial advice, just from my experience. No. So cool. Yeah. So I won't do Google Alibaba again, because we don't want to just we want to talk about a few more things here. Again, Microsoft. If we're looking at forget that. This is quite a key level here. And I'll tell you why, because we come down to the daily there. You see, so you'll get. You can actually make that a little bit better. You'll get used to these things.
No. There's one further up top.
So here, there. That's it. This one. So bounce. Or maybe even like here.
A bit further up.
Yeah. Bounce again. Bounce here, right in a lot here, and perfect. So you'll get used to this. You will just see these things in the charts when you get practice. And then again, if we do come and we do time it and plummet down, then we've got this level here, right? For Microsoft. Microsoft is great. I found Microsoft. I personally invest in Microsoft myself. Is great for you can see just continuous and like growth, like complete growth. You know, you're going to get what you're going to get. And this is what Martin was talking about, the crash last year. You know, as the pandemic hit February, you see, we've never had such a crash if I zoom in.
Yeah, but the other thing is, let's just look at Microsoft. Can you see that, you know, it comes back to test the red line now and again?
Yeah. So this is on
so if you go back to your monthly one,
there you go.
Right, here. So you can see, pan out. Right, so you can see it's retested it twice there.
Yeah.
It tested it in, I'm going to keep moving, 2020. Yeah, exactly. Right.
And then we had it here as well.
If it comes back to that level, it's a big level. That's a crash.
Exactly.
Yeah. It's a crash. There's no question about it.
100%.
And in order to do that, it is a liquidity-driven event, or we'll talk about what's driving the markets at the moment.
Exactly.
Because fear is stepping in a little bit, which is interesting because the market dynamics are changing now.
Yeah, exactly. So yeah, guys, so the point here is we're looking at potential tipping points. And if you want to have these levels on your charts, you want to be looking at these. And if we do go towards what we're potentially heading towards is this major crash, then we know where the opportunities lie. So that's what we want to make you aware and sort of show you the charts. But that's everything.
Can you do some of the indices? Sorry.
Oh yeah, sorry. So we do.
Can you do the Russell? Dixie. All right, you brought up Dixie.
Let's do the Dixie and FTSE 100, and we'll just keep it at that basically. Yeah. Right. So if we so this is on a monthly. So we're looking at. So to be honest, this is very interesting because we've got. If I just show you from a while back. So this is 2004, right? And then we've got another hit 2005, and then we come back, and then obviously here 2009, 2010. I can extend this a bit actually, and then we've got 2018, 2 years ago, and we're at that level again. So in 2014, after many years, after 10 years, we actually managed to break above the around 90 mark, right? But now we're coming down and really testing that now. So this is getting interesting. I mean, what's your thoughts on the Dixie actually, Martin? It'll be interesting.
Right. So just to let people know what Dixie is, the Dixie is the dollar index. Yeah. It's a dollar basket. Yeah. So that's what Dixie is. Look, there's a lot of people that are short the dollar because, the traders has been for shorting the dollar. Mm-hmm. So net, there are a lot of shorts in the dollar at the moment. So a spike and you've seen the short squeeze, GameStop, you've seen what it does, right? If there is a short squeeze, the dollar will move very, very quickly, which will disturb the stock market completely, right?
Exactly.
So the dollar used to be a safe haven. So when there was volatility in the market, when the stock market was crashing, the safe haven was the dollar and people would buy the dollars, right? But now they've been going, well, actually you're producing too many dollars, so we're going to sell the dollars because the dollar is worthless. So there have been lots and lots of people shorting the dollar, like lots and lots. And that's been the trade, short dollar, short dollar, short dollar. I wonder if that will change now. And we've seen a temporary low in the dollar, and the dollar will now shoot up because there's a pandemonium going to occur in the stock market. And one of the ways is that, why would the dollar rush all of a sudden? It is because it is a safe haven currency. That's why. Yeah.
Yeah, definitely. I think the other thing is just to highlight here is basic economics. We've been having these crash because simple. If there's oversupply, you know what happens to price. So we've been having printing as we've been talking about since like the last 6 months, non-stop. And literally since the last 6 months ago, since then it hasn't stopped. So you can understand that. So I think should go to the FTSE.
I think on the dollar side we're going up.
Yeah, it
wouldn't surprise me to see us back in the 92s plus.
Yeah, and I think what you also want to pay attention to here, I mean, this is on a monthly, so this is a large time frame, but until we break this region, which is the previous high, right?
And it's been a big support for a long time.
A long time, exactly. So yeah, basically, I agree with you. Okay, cool. So let's look at how FTSE. So the UK companies, 100 companies. I'll look at this on a weekly. Oops. I think
Go ahead.
Is this the UK 100?
Yeah, you got UK 100.
but we only got till April 20. I don't know why. But yeah, I have no idea what's happened then. GK 100.
Yeah.
Gold prime?
No. Just go to FTSE 1 at the top.
Yeah, but that's the one I got. That's the one I got.
All right, go for the bottom one, capital.com.
Yeah, capital.com.
You got more?
Got it.
No.
Yeah, perfect.
Yeah.
Yeah, all right, cool. So let's look at this. No, even this to 17. Okay. All right, let's work on what we have. I don't know what. Wait, let's try one more. Hold up. Let's try around this. Yeah, there you go. See, thought so.
Okay.
Cool. So what we want to look at here is, well, the very first thing that you can see is, again, very similar. We've got a support level here going, but the difference here is we've got, I mean, this has been extremely volatile. When was this? March 2020. We did have a dip below this sort of region. But I just want to pan out here a second, because I know I've been looking at this for a while. So this is the other point I want to highlight here. Whoops. So this level, we've been bouncing between this, right? And that's what's been happening. So we've gone up, we've hit, we've come back, and we're back up. But the key thing here is these MAs. So we're still technically below the MAs, Martin, right? If we continue, we had AMA crossover, and this is on a monthly.
You're on the monthly time frame, yeah?
Yeah, this is a monthly time frame. Yeah. We're still below the MAs. So that's what the interesting point here is, Martin. But what's your outlook and perspective on the
Listen, the FTSE hasn't moved like any other index. All the world indexes have moved crazy.
Yeah.
Nikkei, phenomenal. Yeah. Right, DAX, phenomenal, right? Yeah. They've all moved. The FTSE has not followed, because the FTSE is mainly consisting of commodities, banks, oil stocks, right?
Yeah.
Okay, so I'm going to be a contrarian here, because I know that some people go, oh, the FTSE will crash because of that. I don't think it will. I think it will correct.
Okay.
Yeah. But I think the correction in the FTSE may not be as bad as some of the other indices, because it never went up that high. Right?
Yeah, exactly.
If we then talk about inflation, which is why everyone is scared of the stock market at the moment, or everyone in the stock market is scared because of inflation. Well, an inflation hedge has been oil. If you look at the price of oil, it's just been climbing, right? And I said to you, do you remember in one of the videos, I said to you, it would not surprise me that in 2008, oil went from hardly anything, $30, $20 a barrel, all the way up to 120. And I said to you, it's going to happen this time.
Yeah.
Right. It's going to happen because the same sort of thing. Everyone shut supply, right? And supply is tight at the moment. Although demand went down because no one was flying, supply was tight. They still haven't brought additional supply yet.
Yeah.
They only start bringing additional supply once oil prices start to rise.
Yeah.
And they go, we better start the pumps again, right? And it takes a few months for the pumps to start. And then all of a sudden, everyone's pumping. And then now they've got too much and it comes back down. Yeah, it's a cycle. It's an up and down cycle.
Yeah.
So, with the FTSE, I would, because it's so strong in resources, and if you look at copper prices, they've done really well. They've done exceptionally well. They could even go further because again, it's linked to the dollar. So if the dollar starts strengthening, commodities prices will start coming down, right? Which will in turn hit the FTSE a little bit. The dollar then starts dropping. It will increase the price of oil and other commodities, basically, and the FTSE will rise again.
Yeah, I pretty much agree with what you said there. I have the same following, so 100%. And yeah, it's interesting to see what these markets, and I like the point that you put out there is clarifying what is included in the FTSE to understand and distinguish between the differences in these indices that are all around the world. And that's the important part here, is knowing what is included in the indices, and you summed it up perfectly there.
Yeah.
But yeah, so go on.
Yeah, I was going to say to you, can you bring up the Russell?
Yeah. What's the ticker?
RTY.
RTY.
Russell Mini. There you go. Russell Mini. It's fine. Yeah.
So
that's one.
Yeah.
Top one. Yeah, that's fine.
There we go. See?
Oh, you've got the futures up.
Hmm.
You got the futures.
RTY.
Okay, it's fine. Just go Russell Mini up the top.
Yeah, but what it is a drop down. Can you see? So
Yeah. And then go for you went for the first one. It's fine.
Yeah,
Just go for the first one. It's fine.
Okay, so that is the futures though, yeah?
Yeah,
That's the futures. Fine. Okay.
All right, so you've got on a monthly time frame.
Yeah. Let's look at this. Is not much data. No. 1 second.
No, it's because some people just Well, anyway, look, what I was trying to convey to people is that if you look at this index, it's way overvalued at the moment. Yeah, and there's a long way to go. So
there we go.
Right. So if you look at now, you're on a weekly, right?
So this is a weekly,
So you can see that it's touched that red line. Mm-hmm. Yeah. Can you see? So if you come back to that red line, you've got it at 2000, right? On the Russell, right? Now, it's gone up a tremendous amount, right? It's gone up a tremendous amount. And people are in this reopening trade, right? So the reopening trades, shops are going to open up, but they've already built in all this hope value into this thing. Mm-hmm. And some people who are late to the party will go, reopening. We've got to buy stocks. Well, hold on a minute. Everyone had bought months ago, right? Yeah. The stock market is a forward-looking indicator. So what's going to happen is that these guys are going to go, I'm buying them because the reopening trade, all of a sudden the stocks are going down and going, well, hang on, we've reopened. Why are they going down? That naturally happens, right? It's already built in there. If you put it on a monthly time frame, if you just go to that chart on a monthly time frame, Kiki.
Yeah.
Look at that. Yeah. Look at that.
Mad.
Look how far it is. Look how far it is. And I know on the monthly time frame is a too longer time frame. Yeah. But it would not surprise me if, and I'm saying if, there was a huge correction that this thing will take a hit. It needs to take a hit.
Yeah.
Yeah, it needs to take a hit. It's just
put this down to weekly, back onto weekly. So that's what we're
if you put it, right? If you put that down onto daily as well. Right? On the daily, it's not that overstretched, right? Because it came back down. Right.
Yeah.
But you saw how the chart of, and you can draw trend lines. You saw how the chart of Apple turned slowly, didn't you?
Yeah, exactly.
Okay. So in the same vein, this is the smaller cap index in the US. Mm-hmm. In the UK, we've got the FTSE 250, which is a smaller index, right? Yeah. What you tend to find is these smaller indexes move very quickly. Mm-hmm. Right? Yeah. They're more volatile than the larger indexes, right? So again, if this takes a hit, then the 250 will also take a hit. Right? Exactly. I think just be interesting to see what happens. And I am very mindful of this thing actually just gone up too much and recorrect again. You probably see it you probably see it drop and then come back to maybe in March and then fall back again.
Yeah, that's what exactly. So
sorry.
No, go on.
I was going to say we just need to cover quickly before we wrap up and close why all this is happening.
Yeah.
Right. Because it's a lot of the things people, and this is not just related to stock market, guys. Right. Because don't forget, I also do property. Right. It's bond yields. The reason why is that bond yields have been kept so low. We've said, interest rates are really low. Interest rates are really low. Well, interest rates are beginning to tick up again now. So whereas the justification in valuations of the companies was that people were saying, but you know what? And I said to you about the Tina effect. There is no alternative.
Yeah.
They're going, well, I get nothing in the bank. The bond market is, paying virtually zero, right? Or negative real yield. I'm going to go in the stock market. Now those yields are rising. Let's pretend we're a big family hedge fund, right? Or a family practice where our estate is worth, hundreds of millions, even billions, right? And all our jobs are, as managers of this estate, is to actually protect the wealth of the family. It could be the Rockefellers, it could be anyone, right? We've got all this value. What they do is when big money moves, it moves in safe. It wants to be safe. It wants to protect what it's already created. It doesn't want to give it away in a crash or anything else. So it looks at it saying, well, actually, we've invested in stocks. Now stocks are, well, yeah, before the reason why was this. Now those reasons are changing and bonds are actually paying us 1.5%. Whereas stock market yields, right, on shares actually is the same. So let's say before it was the other way around. Bonds were down here, right? Bonds were paying less than net zero, and at least the S&P and others were paying 1% or 1.5%. Now those 10-year yields have gone to 1.5%. So now that's going this way, and people are thinking, well, actually, that's risk-free. I'm going to dump something there. That's why, and it will rise slowly like that. And that's the main reason why we're talking about these corrections, because it is associated with interest rates, which in turn, if you're in property, interest rates won't be staying this low, right? There is I don't know, maybe we've seen the low. Oh God, I want it to be the last. I want to see the low in interest rates because it's crazy. The market's crazy.
Mad. It is mad. It's madness.
Yeah, let's hope that we've seen and that will bring a correction. All this valuations in assets has been created through a low interest rate environment. And I know it doesn't sound like a lot, but when you talk about trillions and trillions of pounds, so what you had was in the beginning, the Fed came in, all the central banks came in, they basically put debt. And above that debt, they were going, oh yeah, debt's free. People went property, people went shares, and they kept piling it up. And the cream of the cream is GameStop, right? Because they gave free money out. So these guys started investing. So all of a sudden, and I got this from I've forgotten his name now, Mohammed Al-Fararian, who's a really clever guy, and what he said made real good sense, right? So all of a sudden, you've got all these companies relying on cheap debt, and the price of debt is now beginning to go up. This is where the liquidity crisis will occur, right? And this is my thought, not his thought, right? If all of a sudden people have been shorting bonds because they reckon that bonds are going to go down. All of a sudden it starts going up. People will need to take their money out because they're net short, right? If they're net short, it's going to drive interest rates further up. And that's going to have a detrimental effect. So that liquidity is margin caused by the bond shorts. People have been shorting bonds quite a bit, thinking, oh, it's going to go further and further down. Well, it's moved its ugly head now. So it'd be interesting. And if these things happen, guys, they will happen really quick. You would not believe it. So if you're trading in the market, what you should have is the dollar index up, always important, right? You should have dollar index up, the volatility index up, right? And the 10-year yield. If you see the 10-year yield rising, right, going up, so at the moment, it took a little bit of a hit on Friday, which was great, right? Well, depending on where you were in the market. So the stock market went up, right? But again, on Monday, if it opens up and bond yields start rising above 0.5, right? All of a sudden, you've got the dollar index going up, and it has been going up, right? You got volatility rising. Put on your, as they say, big boy pants and a hard hat, because we're going down and we'll go down rapidly. So when they start selling, they'll just start selling very, very quickly, right? So just be aware of that. I'm not predicting it. It's Sunday. I don't know what's going on in the market.
Yeah.
But it would not surprise me that we do need to see some sort of an event that may occur. And I'm not saying I'm not calling for it, but I'm very mindful of it.
Perfect. Yeah. Perfect. That's brilliant. So, in a nutshell, we've covered, what is what a lot. Yeah. Why the stock market is crashing, some of the opportunities that me and Marttand are seeing, and market manipulation. So what I want to say now is, first of all, so next week we're going to be talking about, so we're going to be introducing more areas into stocks that we're looking at. We've obviously we covered semiconductors, covered EVs, we've covered indexes quite a bit now as well. And there's a lot more. So next week will be actually I will be covering a lot of biotech that I've been looking into. You know, I'm a big tech on emerging markets as well: biotech, fintech, prop tech, insurtech, legal tech, all sorts of basically.
Yeah, and if you cover biotech, I'm going to cover commodities, soft and hard commodities.
That's the other one I was
because I think they're going to go up. Yeah, with inflation rising, they're going to go up. They've been going up anyway. Yeah. Right? Yeah. But I think I think we're in a cycle where it could be a strong cycle. Right?
100%, and we'll cover that. So we'll say all the golden nuggets for that, and I think the commodity is very, very important. You know, gold, silver, precious metals as well, especially, and understanding the outlook of those investments, those assets. But again, lastly,
please.
One last thing actually before that is we'll be releasing a question answer in the stocks. We did a question answer which is quite popular for the property video. Remember Martin a few weeks back now. It was very popular. So a lot of people watched that. A lot of people gave some really good feedback. So we're going to do exactly the same for stocks. But what we need a good. So like what we had for property, we had a good questions come in from you guys. So drop us your comments or questions that you have in the comments below in terms of the stock market, right? So
or email them as well.
Or email them. So come up here at info@infinitywealth.me. So they could be anything related to the stock markets or even commodities and indexes, anything basically of what we're talking about here, or comment them below in the comment section. And we will get those put together.
And what's important with the algorithms, is that people need to interact with these videos.
Yeah, exactly.
So please, even if it's commenting, whatever it is that you've enjoyed it, but any comments help algorithms actually promote our YouTube channel, basically.
Yeah, exactly. And it's again, so like make sure if you're watching, you're a regular watcher, please subscribe to the channel. As I said already at the beginning, I'm going to say it again, we are talking about current things that are happening now. So you want to be watching these videos ASAP and you want them to come up in your feed. So if you want them to come up in your feed, you need to subscribe and like the videos and comment below as well, right? And the very, very last thing is please also share this, even with just one friend, right? The reason why it's not only going to help them learn about the markets, help them learn about what we're talking about here and the opportunities that we're making, right? It's also going to help us grow this community and provide you guys with more content so we can give back to you more and you guys can learn more. And on that note, me and Martin are working on a few courses this year. Now, obviously, because we've had the pandemic, we do want to provide the most value. So it's good if we can do it personally together. But of course, because of the pandemic, we haven't had the opportunity to really get together and do that for obvious reasons. But we've got so much feedback from you guys in terms of the courses and affordable courses, not like some of these companies that charge ridiculous amounts. Good courses that provide a lot of value. So if you're a beginner, a startup will have something for you. If you're an advanced person looking for an advanced course, would have something for you. And we're going to execute this when we can get together properly, so it can be very, very valuable.
Well, I think we'll have a chat because we could actually launch something online as well for you guys. Right?
That we were talking about. Yeah. Exactly.
So an introduction one that we'll do, and the advanced one will be covering, like I say, relationships between dollar, bond market, stuff like that. So people, when they trade, they don't see that.
So there'll be online courses, but what I meant, Martin, is like when we're recording them, we want to be together, right? So that's what I mean. So workshops and stuff. Once things are back into normal, we will do those as one-offs. But these courses will be online, so you can, in the comfort of your own home, you can literally do this in your own space and own pace and time. But obviously, when we go to recording it, me and Martin really personally want to be together just to get the logistics of recording everything.
I've got you.
Everything. Yeah, that's what I mean. Yeah, cool. So apart from that, thank you so much for tuning in.
Share.
Exactly. Listen to the Yoda. Don't forget that. Listen to the Yoda.
Do you want me to do it?
I'm in my meditation area. As you can see, I'm going to start meditating.
Oh, by the way, I want the market to crash.
Yeah, let's all pray.
I'm putting it out in the universe because I can buy cheap stock. But it's just crazy, man.
The power, the power of the secret. We're making this the world work for us by putting our energies out into the world. But cool. Sounds good. So we hope you enjoyed that. Again, subscribe, leave comments, share this with your friends. Apart from that, we'll see you next week.
See you next week. Yeah. Take care, guys.
Bye, guys. Bye.